What is going on, everybody, and welcome to another weekly update. And what I'd like to do in these videos is provide you guys some upcoming events, some upcoming earnings to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do plan on doing some more informational things here, as what is going on in the market is quite interesting. Now, I have stepped away for a bit as I was gathering my thoughts, going through some personal things and prepping for other things. But nonetheless, not going to get into that personal side of the house. But I do want to take this channel potentially a little bit more differently and just displaying charts and upcoming events that are currently going on. As of right now, what I am going to do is going to do get back into the weekly updates. So you can expect that I'll be doing at least weekly updates to prepare you for the week ahead. And then perhaps get into some potentially other different investments and getting a little bit more into that aspect of it, as opposed to just coming on and giving daily news. I might actually jump on the camera and talk about some current news events and stuff like that as well. So if that's something you're interested in, remember to drop a like and to share and subscribe, so we can go ahead and explore that journey together. As there's a lot going on in the world today, and so from my aspect of it, I would like to incorporate more of that kind of stuff into this channel. I know it is a stock market channel talking about the economy, macroeconomics, something I love to do. This is why I generated this channel, and I want to aim more towards that, even though I'm not going to get rid of all charts. I do believe charts are very important, and I do want to still incorporate a lot of that stuff into what I do. I just might make that a separate video as opposed to the way I have been doing it. So with that being said, I'm going to go ahead and stop the ramble, as I don't want to continue to just keep rambling. I do want to give you some informational things, kind of get used to what we used to do around here, and kind of just go over what's been going on. Now, the last video I did here has been a while. I don't recall the last video I actually did. I think it's been well over a month, maybe even 2 months at this point. I'm not quite sure, but with that being said, again, this is something I love to do. I still have done it every single day, even though I haven't been reporting here. Something I love to do. Obviously, that's why I've been doing it for such a long time, even before I started recording videos. But nonetheless, we are getting into some things. I want to kind of talk about where we kind of have been at into where we're kind of going. Now, I've stated before I essentially went offline, quote unquote offline, is that I have come into the final stage. I'm not worried about inflation, although I do believe inflation, there's the risk of inflation shooting back up. I think as of right now, what we need to pay attention to is the final stages, right? We started getting the breaks. Now we are looking for more of that to occur. And again, if you want to relate back in history, the 2008 crash, it took a couple of years for that to play out. And so these are things you have to be mindful of. I thought some of these things would have been a little bit more expedited. And something I've talked about as well is that it changes very quickly on any piece of data, but it's mostly based off of what the Fed's actual actions are. And they have been transparent about a lot of different things, although they want to leave a lot of optionality open, quote unquote, rate increases because of what's currently going on. So this is something you have to keep in mind, is that although inflation is coming down, again, the same aspects I talked about even on the last video I had on here was to understand that, there's a lot of hidden inflation that people aren't quite understanding unless you own a home or own some sort of asset, that's obviously taxable, and all these other like property, auto, any kind of other particular assets you may have, right? These particular items are getting a lot of, if you haven't noticed, services has been very, very overinflated and being very troublesome for the Fed. Because of that fact, you have to understand that services affects everything. Anybody that essentially is the middleman in getting products to you or to maintain your house, your car, any of these other things that you need, basic necessities, anybody that touches your food or transports your food, all that is inflated because of the rapid rate of inflation that occurred. People had to increase their prices to essentially uh, make it worth their time, and understand that inflation had got so bad last year that people had to raise them, or else there was no point doing those jobs. You can't have people back out of those jobs and then not be able to provide that service. There's very necessary services that need to occur for these things to happen. So understanding that core inflation, once they raise these services higher to kind of match and go with what's currently going on, still be profitable. You have to understand services still have to be profitable or they're going to go away, especially if they're very necessary. They have to increase these to stay up with the rate of inflation. Then also understand that they don't dial back. This isn't something else that occurs, and understand that because of the rate of inflation, these services are inflated and that they don't just dial back. And so with that being said, you're going to, and now people are having to adjust for the high service cost for a lot of these different things to get these things done. And so it's not like something else, how cars have the seasonality, how homes have seasonality when they sell, when they're hotter periods of time when they sell, when it's, one side's heavier towards the buyer or toward the seller, just depends on the market. And so right now services are inflated and they're again not going to take a step back. Once those rates have been increased, then they kind of just chill there, and that's essentially what it is. And to be able to destroy that, the only other thing you can do there is try to liquidate more other people's assets, because things are just at such a high rate. And so as ultimately what happens is people that have to pay these services, they or the services that are running, they have to make sure that the person themselves are essentially eating that expense, not them. And so this is why services are a very tough thing to just to dial that back down, and how it won't just drop. And so the next thing you can do is push it to where these loans for these companies that run these services, that it is so hard, so expensive to operate because of all the other services that are charging, that they essentially, you start collapsing companies. And so that's essentially why the Fed will continue to raise rates. And something I've talked about in many of my previous videos, if you followed me at all, is that you have to pay attention to these things because of the fact that again, once we start getting more collapse, you're going to start getting more layoffs, and then that in turn is going to will allow demand to diminish, so that the Fed can start cutting rates. And so despite all the things that you hear about inflation's going down, yes, because there is no demand on things that people are just doing the basic necessities, food, and shelter, ultimately at this point, are where expenses are. And understand that you talk about services, you want to go back to services, right? Taxes, people are selling their homes for massive amount because there's a very low supply of housing units. And then ultimately understand the taxes associated with these new tax brackets. As soon as someone sells their house for 200K more than what they than the current market was a year ago, you have to understand that puts that house in new tax bracket. So any person that buys a house after the fact will have to pay that tax. And so these are hidden expenses, and HOA fees are going up, right? There's no real kind of regulation around there. If they feel like inflation has gone too high, they bump it up, just like services. And then there's nothing to adjust it back down. It's not just going to go back down. It stays at those elevated rates. And so if you notice, it's going to be more and more expensive for anybody to own anything. And so this is why you're getting such a big uptick in a lot of these areas in the US that weren't really expensive, just 2-3 years ago, right after the pandemic, to now are, double, tripling prices. People are moving out of California, moving to Colorado. A lot of people are moving down to Florida. A lot of these big popular destinations are getting overwhelmed. That were once cheaper now to being more expensive. And so with all that being said, what we're ultimately looking for here and we're paying attention to is the Fed. And again, I just explained why they're going to, or potentially looking at 2 to 3 more, because they know they've broken some banks. Yellen has talked about over the past couple of weeks that I haven't really been on here. She's talked about more mergers, because if you have followed me, you've noticed that I have been on Twitter. I've still been doing daily updates there. Again, I still love talking about the market. I still love following market. I'm still very much invested in the market. But again, patience is one of those things where you can't really put, you have to be very patient and just wait for the moves to happen. And sometimes it takes a lot longer than maybe your mindset can deal with, right? And so with that being said, as of right now, we know things are breaking. Now the next step is to destroy services. You destroyed banks. Now, how much more do the Fed need to push it for companies to start folding and collapsing? When those companies folding, collapsing, that starts killing some of that the services in themselves, which can potentially bring down some of those numbers down, because if people start collapsing, people will just start, they will have to bring their service costs down to be able to be competitive at that point. Right now, people are just having to pay it, right? And so this is what they are doing. This is the next step. And that's why I said when you're in the final stage of collapsing and trying to put us in a recession, it's services is so strong right now that they have to increase it another 25 point basis, another potentially 2 more raises before the end of the year, to be able to start collapsing these companies. And then when you start hitting these small businesses, they make up a huge part of the economy. And then you see the flood of recession. Then you see the flood of people selling their homes, trying to get liquidity, because again, right now, that the liquidity, there is like no liquidity at all. At a period of time, it was a week or two ago, it was trending about the closest pawn shop to essentially sell items. Something I talked about before about luxury items. Now people are just trying to pawn whatever they can because liquidity is drying up. And again, the only reason why homes are still skyrocketing, because again, supply is extremely limited. People, who wants to pay 7% interest rate when people were just paying 2 to 3% interest rate just a couple of years ago? And now it's bumped up ridiculous, but people are fearing that maybe it will go to 10, and there's a strong possibility for continuing to raise, because we don't know how long services will hold up. And the market is anticipating that, oh, we're going to pause and everything's going to be okay. And something I talked about, I believe, before I got off of here, was the fact, YouTube primarily, is the fact that, you know, the market in itself will continue to push up, and it feels like if it's going to adjust, it's going to pause, then the odds are in favor that the market would push up 2 to 3 months after that fact. If it was an official pause, we don't know if it's official pause until the next monetary policy. It's going to go monetary policy to monetary policy, and then ultimately understand that if it is a true pause, the market will correct, because once we start cutting rates, at that point is when the market corrects for a recession. We haven't priced in a recession because all we've talked about was the fact that we were going to have a soft landing. But again, inflation is still very much a problem in services. And this is why, and I'm not trying to paint this picture just for the bears. What I'm trying to say is that event still isn't priced in. Take advantage of the pumps. I'm not saying don't take advantage of the pumps. I talked about it. You can look at my videos before, back when Tesla was $100. I was talking about dollar costing average, and I talked about that particular move when we dropped down to the was roughly just under 3,600. There was a huge spike. That was a single day event. When the market dropped down to 3,500, then there was a huge buy at that point, and the market has just gone up since that point, right? And you go reference my videos from before. It was around that August, October time period when that move happened. And then all we've done since that point, it's been pushing up. But now, every time since we've had such bad news coming off a bad year, now we had a positive aspect come into the market, aka AI. ChatGPT has essentially, oh, well, that's an easy 10x. But what we're noticing is coming into this earnings is, if they can't produce, that could kill off the strength of this API, or not API, but this AI movement, essentially ChatGPT movement that's currently going on. So this is what you have to be mindful of. And this is why earnings is so important, because it's only going to give you a lot of the truer data that you're not currently seeing. So with all that being said, that's kind of where we're at. We're at the final stage here of the Fed fighting services. We've broken banks. Well, we're going to continue to see more bank, especially this particular week, because we have a lot of earnings kicking off this week, especially regional banks. It's going to be a very important week to highlight on what banks start failing or news you start hearing about banks this week. And if Yellen's made two particular comments about it in public, that means it's going to happen. These banks are barely holding on, and you're going to see something else collapse. And I would not be surprised if it's this week you have another handful of banks. And again, when we get into Q3 earnings, which we just started, we're reporting Q2 earnings right now. So when we report Q3 earnings, you're going to get more bank failures. I'm sure of it, especially with rates, unless we start cutting rates. But that's not going to happen unless you get this thing I just explained about with these services. A lot of these small businesses just start collapsing. Then at that point, you're going to start getting essentially more problems with that industry. And understand that the only way you're going to be able to stop these companies from coming down and going bankrupt, it takes time, because a lot of these companies have essentially loans at a fixed rate. And so a lot of them took a lot of loans out around that time when they were super cheap to take out. The problem is when those loans mature and they need to get new loans for new projects, that they're at such a high rate, these companies can't afford it. And that leads to problems. That leads to the downfall into huge, massive recessions. And Elon has been warning us about these things, and that's why it's going to be interesting on Wednesday when Elon does come out and talks about these things. He has been dropping essentially little gold nuggets about what is currently actually going on the front lines, and it's extremely important to listen to what he says because of that fact. So, with all that being said, we can go ahead and start getting to a little bit of charts here and start looking at what we got going on this week. So last week, now that we're kind of up to date on everything, last week we did have the core. The core came in lower, right? We were at, I believe it was 4, and we were aiming for 3.1. We ended up hitting 3. Again, food, housing, shelter, and services are still very, very high. You want to take that out, whatever the case is. This is basic necessities. I don't care about what happens with everything else. People aren't going to pay for those things because they can't afford to live. So if they can't afford to live, obviously there's not going to be any demand for anything else. So yes, of course you're going to see a huge drop in inflation, because that's not how inflation works. People are just trying to survive at this point. Now another big thing coming up this week is that was pretty much last week. Again, there hasn't really been a lot going on. We are waiting for earnings. Right, we have these dull periods in between that we try to just wait for. We had a lot of Fed members talk last week, because this week is a blackout period. You get a blackout period for the Fed right before they do deliver monetary policy next week. A very high rate that we're going to get another 25-point basis move unless we get something this week. Again, once you become closer to earnings and exposing true numbers, you start getting the bad news. And so this week is very much watching earnings, especially because we have a lot of regionals. We need to see what is exactly going on and what news what we have by the end of the week to go off of, which will bring into the monetary policy. So even though it's in the 90s for another 25-point basis move next week, we have to see essentially what companies are going to collapse this week. If we get a bunch of companies that collapse this week, I'm sure that would drop down to 25% by next week. So you can't go off the numbers now. We have to get through this week and see what happens. And then from the end of the week, we can really kind of gauge where the market is at. And that's now being said, if everything looks really strong, maybe we go back to all-time highs. But we have to understand that even if we hit an all-time high, a recession is still coming. The fact that the rates are continuing, again, we haven't seen true rates really hit the market until a lot of these loans start maturing. This is why I talk about delayed reaction, because it's going to take months until these companies start requesting more loans to run their business for more projects, more features, whatever the case is. That's when you start having problems, when they can't afford these things, and then they start folding even more. So this is what you have to pay attention to. A recession isn't priced in. Maybe we go back to all-time highs, but recession is going to hit at some point here. Is the market going to hold this week and then collapse? Maybe we get a lot more regionals. Maybe we get another run for the bank. Maybe there's more new fear back in the market. We're not really sure. Again, I still think Q3 is going to be the worst, but you're not going to see the results of those until the back half of the year in Q4 when everybody's saying we're going to get a recession at that point. So again, we see so that we have blackout period this week. Next monetary policy isn't till the following week on the 26th. So that's going to be important there. And then the next core is until August 10th. Again, core inflation, people aren't really affected by what's going on in core inflation because it's coming down. Essentially the news, the headline news core is like way down. So people are like, oh, well, everything's just fine and dandy, when in fact it's not. If you actually are a homeowner, you own any if you own anything that's essentially taxable, that has an annual taxable fee, you have to understand that there are a lot of hidden expenses that are still very, very expensive. This is why people can't own homes, and they're getting into these homes and not realizing that, okay, well, something broke, I got to pay for that. That requires a service that is very inflated as of right now. Taxes, again, I paid an additional $200K because I need a place to stay. Now that puts the house in a new tax bracket. There's an HOA fee that got pushed up because of inflation, or a condo fee, whatever the case is. You have to understand, everything's inflated. So all these services that we're talking about, again, maybe you're not paying that on clothing or for something else, but ultimately understand you will pay for it. That's how inflation works. It rotates into the things there's massive demands for, and that's what we're seeing. And so again, services will remain high until you get a lot more businesses that go belly under. And so again, things are again in a very bad state as of right now. So not saying that the market can't push up. I've talked about that before. Again, the market is separate from the economy as of right now. The utopic picture, things are great. The market will continue to push up until we actually start getting recession, until you start seeing some of these corporations starting to fold, file bankruptcy, those type of things. We're not really sure when that's going to happen. Powell, I believe, feels we are very close. This is why he wants to keep a couple extra 25-point increases in the back pocket just in case. He needs to push it a little bit further. But since the banks, essentially the banks are that first wave to tell you that things are starting to break, so it shouldn't be much longer before businesses start to do the same thing. So upcoming earnings, again, big week on earnings. This is one of those weeks you really need to be paying attention to, especially headline news. I'm definitely watching to see. Got a lot of regionals this week. I'm not going to list everything on here. Again, these are the ones that I am just looking at. There's a lot of regionals on here that I believe could start going belly up. Maybe we get another 3 to 4 to 5 different banks that fail and they come out to, again, just like First Republic got delayed. It got delayed only for them to essentially report their earnings, and then they went belly under the next day, and they were essentially absorbed by JPM, which should have never happened because they already own a huge portion of the sector, and you're only, I don't know the specifics on how much you're able to own of that particular sector, especially in the banking sector. I believe it's only I think you have to be under 10% or something like that, and they own more than that now that they absorbed First Republic, and it was just essentially just given to them, right, by your lovely bunch of treasury and everybody else. So with that being said, what I'm watching this week, again, it starts out, we start getting regionals in the morning. We do have First Republic Bank. I think it's after close tomorrow. It's whatever the new bank branch is that I think they recalibrated or whatever. So we will get some banks tomorrow. We're getting banks all week. So that's something to keep in mind. And I think, again, we had JPM last Friday. Again, obviously, it's going to do well. A lot of the big players, Wells Fargo, Citibank, they started selling off heavy towards the back half of the day. So again, for them, it was more so their forward guidance and what they were looking at moving forward. And so, yes, of course, they're going to beat expectations out of the water. We just had a banking crisis, so tons of funds have come in. Banks do well when they hold your funds. And so now that people are worried, again, obviously they're going to do well because everybody goes with the best during hard times. So with all that being said, again, this week I got a list full, essentially a list full of banks on Tuesday. You got PNC, you got BOA, MS, Morgan Stanley, Goldman Sachs on Wednesday, ASML. So you got some chips on Wednesday. Your big tech day, it's kind of on Wednesday. It starts out with chips, and then you have Tesla, Netflix, kind of give a more understanding into what's coming for especially the big seven, right? The big seven or have been driving up the market single-handedly over the past couple months. We'll see if they can essentially hold that. And this is what you need to be looking at with these big seven. They had massive cuts over the last couple quarters before they reported Q1 earnings. And so that's what you saw, and they were barely breaking even. Right now, there hasn't been a lot of cuts there, but you have to understand that this is going to be a problem because if you start seeing a lot of really bad negative numbers, this is affected by rate increases, right? And so this is why Q2, Q3, you're going to start seeing really bad numbers from these companies because of that, right? You saw some companies still do well because they have massive layoffs. But now that all these layoffs have kind of passed as of right now, it's becoming more of an issue right now. So you're going to start seeing more recessionary numbers is what you're looking for big tech. And then if you see any negativity based around AI that it's not giving 10x returns back, that could be troublesome because if the big seven go down, that is going to essentially hurt all the market in general, which I think is going to come at some point, whether it's not this quarter, it could be next quarter. Again, I'm saying Q3 is going to be the worst of this. And so at some point, you're going to see that reflected. Right now, what you saw was a lot of things break even because of the massive layoffs that they had. You have to put that in perspective. These aren't things that are being talked about out there. You have to think outside the box here and understand that that's why they have done so well. And so, again, something you're gonna have to really pay attention to. So not only banks, you want to start looking at any of the AI industries, chips, right? If the chips do bad, you have TSM on Thursday. If they do bad, right, it's going to be a huge reflection on where is AI really going, and then obviously what's going on with NVIDIA is really going to give you more insight into what's going on because they're claiming 10x. So if we don't get 10x numbers on the next earnings, that could be really bad, and that could take a lot of things back down this bad hole again. Start getting a lot of bad news, right? So we're still roughly around, I think, almost 400 points away from all-time highs on the SPX. So to be able to achieve that, right, you need they start reflecting good numbers, then we could go back to all-time highs. If they don't, right, this is recession. This is what we're worried about. And again, things aren't just going to get better. This is why you have to pay attention. What are the Fed doing? They're continuing to want to increase rates. They need to get that service inflation down for things to normalize again. And to be able to do that, they need to destroy some businesses. Again, if they don't do it in the next 25, they will just hold rates. We can go 2 years like this and the market just keep going up, and then all of a sudden we correct massively. That 40% correction that everybody's anticipating this year may not happen for the next couple of months. It may not happen for the next 2 to 3 years, but ultimately understand that it is going to happen, right? As long as the Fed hold these rates, or holding these rates to normalize pricing, because people don't want to pay 10x for housing, pay 10x for cars, pay 10x for basic living expenses. So to be able to do that, you have to crush businesses. And that's the next sole objective right now, is to crush businesses. This is why you will continue to see rate increases, and they will again be held at a long period of time until more businesses get crushed. It's not just about the banks anymore at this point. It's about businesses. That's the next aspect of this final stage, is now we need to get businesses down. We need to crush some businesses, which again will take time because you need these loans to play out. Once these loans, all these cheap loans have been approved and all the money runs out, they have to get new loans to continue to generate income. And if they can't do that, because again, interest rates are so high, then they're going to have to fold and start selling whatever assets they may have. Again, the same song and dance that we've had. This is why it takes so long, because you have to wait for these loans to mature. And once they mature, can't afford it, we need to start selling assets. Still can't afford it, we're going to have to file bankruptcy. That is what's going on, and that's what we're waiting to play out. So with that being said, again, this will give us a lot of insight into the current recession that we're talking about and preparing for. Again, that whole talk about recession, we are in a recession. People are feeling it, but it's not going to be talked about until after the fact. In the recovery mode is when you're going to hear about quote unquote a recession. And then again, like everything else, they pencil whip it now. They'll come back, they'll correct it, they'll revise it. No, we've been in a recession. We've actually been in a global depression for a very long time. And these are the actual dates in which it happened. Again, they're not going to disclose that information. They don't want to draw panic. So something I've always done before, if you didn't notice, I haven't done it in a video in a while, but I try to price in what the particular numbers are for the week. Again, these are option numbers that come in kind of their anticipated move. So if the market moves outside of that, these are good for gauging what kind of events could have a big move for the week. Again, SPX is really low. They're not expecting any big moves there, although if essentially because the big seven have been holding up the market. Obviously, Tesla has a bigger number than normal. It's been around that 9. Now it jumped way back up to 24 because it has earnings. And you notice that any company that has a specific industry has earnings, those particular options will be up higher. Or if there's a specific event that people are anticipating, again, there's not really a lot of events this week for SPX. So SPX is very, very low this week. So this is why I put this on here to kind of gauge for that. BA7 is normal. If you've watched this channel at all, you know that. JPM, very low. Again, crushed earnings. Forward guidance wasn't great. But again, we have regionals on deck, so that can change very quickly. So that's pretty much that part of it. I know I've talked a lot because this has been the first video I've done in a very long time. So try to get everybody up to par. And obviously, since I'll only be doing a weekly video as of right now until I get some other things situated, and then I will try to get more videos out to everybody. So let's take a look at the charts really quick. SPX, this is a big one. And a big, obviously, we've been kind of ripping up since back in March. We've been absolutely just parabolic. Something I've talked about before is that, this parabolic move, it happens, right? And in times like this, when you think that we're actually pausing, something I talked about, if that was a true pause, you'll go up 2 months or 3 months straight up. And that's what we've seen. Could this earnings be the turning point? We don't know when it's going to be because we need the news to happen. We need banks to start closing, right? Services inflation isn't coming down. We need that to come down. The Fed need that to come down to normalize things. If they can't get that to come down, that's going to be a problem. And so this is why the Fed aren't cutting rates, or they don't know if they're going to pause because they don't know if they've applied enough, or we don't know. What we don't know is the exact dates in which all these loans will start maturing that will put this bind on businesses. Until we know that, we will continue to just drift and we'll continue to push up like in normal markets because we don't have that news yet. Everything is quote unquote fine when it's not. But again, it needs to play out before that happens. So unless you're actually seeing rate cuts, you still have a yield curve inversion, right? So when you start getting cuts, if there is a yield curve inversion, that causes a crash. And I'm not saying like a straight overnight crash. It's more of a downward grind, like we had last year, where the big magnificent seven, they set the pace to the downside, and they also set the pace back up to the upside. And so while everything else was selling off, again, a lot of things that are not big tech, big growth stocks are still very, very beaten down. And so that's something you have to keep in mind. And I still don't think 300 points or so away from all-time highs, we could continue to sell back off from this point and correct another 25% to a new low. It's very much a possibility, but we don't know. Again, we don't know what the timing is on this thing because we don't know when these loans mature and how many assets a company may have to sell, because they're going to start selling assets to start making more cuts. You haven't really seen that in other industries as of yet. And so those are the kinds of things we're really kind of waiting on. So as of right now, the market very overextended, as like I've talked about, but we'll see what happens here. Again, we're not far off from all-time highs. So we're sitting about 310 points roughly from all-time highs, but we'll see. This thing hasn't pulled back. I think it's very much a strong possibility. So you have all this, unless we make all-time highs, you're still very much running the risk that this thing could correct and start selling, and it would be a higher low if we correct it at any point between now and then. So again, that's something you have to keep in mind. You're looking at a monthly candle here too. What's to say we don't push up to 4,700 and then wick all the way back down by the end of the month and then just start selling off again? We don't know that. We haven't priced in a recession. You have to understand that recession is much like that. It's 43%. We only hit 27 at that point. So again, we have to see. Time will tell. I could be wrong. This thing could continue to push up, which it very well could go back to all-time highs with just a magnificent 7. And then the market corrects and just starts selling off again, led by big tech selling off once all these things start like taking place. So these are, again, things you have to be mindful of and taking advantage of. So Bitcoin did have a huge week this week. XRP was essentially labeled it is not a security, so that essentially put huge boom back into Bitcoin. The question is it tried to push out of that 31 K mark? Can it do that? Again, it's still not a new high here, right? Like it still needs to break up over 47K for really to start getting exciting. This is the first attempt to try to retest this level, which is a 37K mark. On a break, if you follow me at all, you get a break and you get a retest. This is the first time we've been able to circle back around to try to retest this. This can reject and make a new low. These are typical patterns that you see in the stock market. As of right now, again, a lot of things have been pretty wonky, to be honest, but this is a normal pattern that does almost always 9 out of 10 times plays out. And so these are just things, again, trying to again make aware and understand what needs to be done. So specific things to look for. So that's what we have for Bitcoin. I'm just going to go over the normal things again here. Tesla